This is Agriculture Today. We are back now for our weekly grain market update. And joining us for that, as always, is our K-State grain economist, Dan O'Brien. So, Dan, thanks so much for joining us this week.
Appreciate the opportunity, Samantha.
Absolutely. So, we were talking beforehand, and you mentioned that it sort of feels like February for you. There's not much going on, nothing exciting, really.
Oh, we have lots of smoke and mirrors and international issues at hand. Within the last week, probably the main issue that's affected the psyche of the grain markets has had to do with the goings on over in the Black Sea region. Again, missiles that had landed in Poland with some casualties. First initial fears were that they were fired by Russia, and which would have signaled an escalation in a regional conflict. But it turns out that they weren't directly sourced in Russia. At least that's what is stated by UN watchdogs, and that seemingly they were missiles, defense missiles fired in defense from Ukraine that landed in Poland. So so anyway, uh, I would not say crisis averted, but it took the heat off of that issue. Grain markets, of course, with if that what looked like an initial provocation, along with the possibility of the of an end of the brokered trade movement deal between Russia and other countries allowing Ukraine grain to come out. That 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 was causing stress in the markets. It does sound like last year or so that Russia has decided not to go ahead and close down that agreement. Apparently, from what we read, apparently there are some they may have gained some leniency in terms of being able to finance exports, some other movement coming around. Apparently, the United States and other countries were involved in that, from what we hear secondhand. So with that, we're still, after all of that positioning and movement, we're still sitting at the place where Dees corn closed yesterday at 667.5. Historically, a good level. And you look at that chart, Dees corn futures have been trading in a range of about 660 up to 710 since, in essence, the end of August. And in the last few days, before this issue was dealt with, we had dropped down to 650, but now we're back within that range again. So when I say it feels like February, a lot of times during February we'll have a situation in the grain markets where there's not a lot of new news, not a lot's happening. We're basically just hanging around, waiting for planting to come or maybe harvest in South America to come about. But that really hasn't been. We haven't had any big worries like that. The South American crops, particularly in Brazil, seem to be okay. Argentina did have dry conditions, had caught some rain, but still not out of the woods there. But it does seem like the corn market pretty much moving sideways. Slow exports. That's just where we're at right now. Wheat, almost carbon copy of that, closed. The Dees contract for hard red winter wheat closed at 938. Down 17 cents, but still in a trading range of where we've been from about 910, 912 up to at the high side, just over $10 a bushel, but closed at 938, so still within the trading range. No major changes there. For soybeans, we had I guess over the last month, the most active contract complex that we'd seen was in soybeans, closed at 1423 on the January contract on Thursday, and so ended up basically with still within pretty much the same range of about 14 to 1450, 1475. So not a lot of change there. So, but yet a little bit better exports in grain in soybeans than we had seen. So not a lot of change. I think that the same issues have held true also in the cash markets. We still see strong basis levels for corn and for grain sorghum. For corn, especially in western Kansas, really all throughout the state, but especially in Southwest Kansas, Garden City, bid of $1.46 over, Colby $1.25 over. The top bid in the Columbus area, in the other corner of the state, southeast, away from northwest, also $1.25 over. Hutchinson $1.21 over. Salina $1 over. So strong corn bids. We're tight for corn here. Same issues as we've had. We'll truck it in. We'll do anything we can to try to get it as long as it's not too expensive. Grain sorghum bids also all positive. So we've just had this ongoing issue in sorghum, Samantha, excuse me, where exports for sorghum, which have been the bellwether carrying demand factor for sorghum of recent in recent years, have been almost non-existent yet. Grain sorghum basis bids holding positive, trending up in different parts of the state. So we must be seeing some domestic use of sorghum for livestock feeding, for ethanol plants, you name it. We're sure not seeing a lot of export numbers. So you have that, and I would say you and I talked about in the last one or two times that we spoke about some of the jumps improvements that happened in soybean spot cash prices, and to me that seems that that's probably a combination of pretty strong domestic crush. We've had good domestic crush in the U.S., so that's been good, but also the river issues we've had to the west. If we're not able to move beans that have been harvested down the river system out to the Gulf, then those buyers from the Gulf can look by rail to come up into our area and start buying soybeans. So it's kind of a temporary issue, but yet it's one that's working to our advantage in terms of soybean basis bids. So you've got it is not a boring market, but right now it's kind of a sideways market, and until we get some new news coming in. We do have a USDA report on December the 9th, which if anything happened, it probably would be that the USDA may scale back their expectations of U.S. exports this year for corn, sorghum, and for wheat, and maybe even for soybeans. If that happens, ending stocks would go up, and the market would probably interpret that negatively. We're not quite as tight. So that's at least as I would look at it, trying to anticipate that what market movement might happen in early December. If that change comes about, then people holding grain till after the first of the year probably have some consternation, because the prices would weaken at least some, waiting for all that to occur. And I guess I think that we're moving in a direction. It's not that we're in a holding pattern until next spring, but we're wondering where acreage will go in the coming year. USDA came out in about a week ago and said they thought corn acres would be up to 92 million, up about 3.5 or 3.5 million or more. Soybean acres be about unchanged. Wheat acres up about 4%. So we've got that information that's come in, and again, we have ongoing strong demand with our good basis levels here, but just not a lot of change in the situation that we'd anticipate, at least until we get past the first of the year.
Sure. And you mentioned that December report that's coming up, and you said that if any changes are released, that you'd expect to see them in exports. Why that anticipation maybe of decreased export demand? Is it kind of just inflation again there that you've talked about in the past, kind of interactions there going on?
I think that's a good part of it. The inflation, as the U.S. Federal Reserve has decided to combat inflation, it's taken moves to affect the U.S. money supply, raise interest rates, and as we raise interest rates, and that has a direct positive correlation with the value of the U.S. dollar. If someone suddenly buys the U.S. dollar, well, they'll get paid more because they raised interest rate on it. So the value of the dollar has gone up, and And as the value of the dollar goes up, tends to work against the economical purchase of U.S. grains. If someone's going to buy grain, they'll ask a export company what their price is, and they'll quote the price, and they'll say, oh yes, now I have to go buy U.S. dollars to pay for that. So a higher U.S. dollar works against us. I think that also China is taking every opportunity that it can to not buy from the United States. If they'll buy from, reports are they're buying strongly right now from Brazil, and avoiding U.S. purchases. I think we really see that in grain sorghum. Just not a lot of purchases, even though they're active in some areas. We have in the last week had some purchases from Mexico of feed grains, which is a surprise given what their policies have been stating of late with regard to GMOs. But we're not complaining. If they'll buy, we'll sell it to them, and that's kind of what's going on right now. So big issues afoot in all of that. But again, nothing that's come in and really quote upset the apple cart, upset our current paradigm of where we're at in the markets.
Sure. And I know we were talking at one point about it didn't look like it was going to be too optimistic in terms of precipitation for Argentina and for Brazil. And we were talking about, maybe buyers would come to the US as an alternative. But now that we've kind of seen those areas get the precipitation they needed to carry them through, I guess as a result, that's kind of another reason why maybe those export numbers, anticipated numbers might drop too, huh?
Yes, just lack of worry and fear in the market that of a failure in these other crops. Now the rains that came in Argentina, as I understand, were helpful, temporary, but now it's going to turn dry again. However, until it's actually proven that they have short crops coming into the periods after the first of the year, that I think. Again, with the high value of the dollar and these other geopolitical motivations going on by a number of buyers in the world, major buyers like China, we're holding off for a better price deal given the high prices we have.
Sure. And well, we know how that goes in Kansas when you get a little bit of rain and it seems like, oh, this might be good. And then it's suddenly like, oh, there's not a lot in the forecast though to come. So
well, that's right. And I think they're sort of like our farm population in that we're optimistic in all that. One thing I should mention, I think we're at the time of year now where some crop insurance checks have come out that should help farmers' revenue in our drought damaged areas. So that's a positive. And you know what? Maybe how that could affect the grain markets is that if we have had crop insurance checks come in, or monies come back to farmers that alleviate some of their financial stress issues, that they're probably not as much under the gun to have to sell grain, particularly
sure.
if they listen to Dan O'Brien and say that, well, things are kind of going sideways, not a lot of movement. They might say, well, I'll just wait for another time frame, especially if I've got this other source of revenue that's helping me out temporarily. So we're kind of we had a lot of excitement during harvest, and now we're probably in a holding pattern until someone gets tight for supplies, and we'll see where we go in 1, 2, 3, 4 months.
Well, I think producers will take any sort of morale booster they can get at this point in the season. But Dan, as always, thank you so much for your insight that you provide during our weekly updates.
Thank you, Samantha. I appreciate it.
Absolutely. Once again, that was our K-State grain market economist, Dan O'Brien, for our weekly grain market update. We will be back with more ahead on Agriculture Today.